So I want to touch on what may or may not be holding you back, as a trader. Okay. Um, there are a lot of misconceptions when it comes to trading. Okay. There are a lot of reasons why you can fall victim to some of those misconceptions. Okay. So, the first thing you have to have when it comes to trading is a baseline knowledge, right? You have to understand, how to read a chart. You have to understand how to manage risk. You have to understand the market conditions. You have to have a basic understanding of what's going on. Once you get that basic understanding, then you need to have a concept. Okay, you have to have a concept. You have to come up with a concept around trading that will bring, I guess, desired results. That will bring success more often than it brings failure. Okay, once you have that concept, then you come up with a strategy. A strategy that incorporates that concept, or that take into account for market conditions. Okay, once you have all those things, you have everything you need to become a successful trader. Not only a successful trader, but a profitable trader. Okay, that's all you need as far as the technical knowledge, man. It might require 3 to 6 months of study time, and then you have everything you need, uh, in your brain to become a successful trader. Everything after that, if you're not successful after that, everything after you have those requirements met, it's you. Look in the mirror. It is you. So everything after that is a personality quirk. It's a lifestyle quirk. It's a I'm in my own head type of situation. Okay. And I can prove it to you. I think for the most part, if you trade it for any amount of time, you probably already know that. But if you're new to trading, I can prove it to you. I can show you. I can show you a strategy. I can show you a concept that will be successful. Okay, if you only take those trades, you'll be successful, and then you can hook that up to your MyFX book. And if your win percentage, your win rate isn't on par with the strategy I show you, then you'll understand that it's just you. Okay, so with that in mind, I'm going to share with you a video. People who've been with me for a while have seen this video, but it's a video that in my first year of trading, even over that first year, I used to watch this video twice a week. Okay, twice a week I watched this video, and then we'll have a conversation about it on the other side of this video. Okay.
Every time I grab a mic, every time I've been offered the ability to speak from a stage or a podium or speak into a mic, whether it's from my desk or whether it's for an organization or whether it's for a trading group, for the last 26 years, being a devoted evangelist for this industry, I have never skipped an opportunity to put the cons in your face, because I think the cons, understanding them, is actually more important than recognizing and understanding the pros. Let's get to the cons. Con number one is the most important con of all. The odds are against you. Traders, listen to me carefully. The odds are against you. Traders, listen to me carefully. The odds are against you. One more time, listen to me carefully. You will never be able to fault me for failing to tell you this, for failing to put it in your face, for failing to shout it as loud as I possibly can. The odds are against you. Why? Because there's a 92% failure rate in the short-term oriented trading space. That's right. 92% of every one of you listening here will fail. 92% won't make it, no matter what you do, no matter how hard you work at it, no matter what your intentions are. 92% failure rate, and not me, not any firm in the United States, not any firm internationally, not any expert, not any mentor, not any trader, not any trainer, not any mentor can change this statistical fact. It is etched in stone. 92% failure rate. Now breathe that in, traders. I need you to understand this. I need you to understand what you're up against, because you ultimately, at the end of the day, are going to have to answer this question. This one very, very important question, traders. You're going to have to answer this. Do you understand? You're going to have to answer this. Do I have what it takes to be the 8%? Guys, this is a simple game, but it's not easy. There is a huge difference between simplicity and easy. It's simple. Markets go up, markets go down, sometimes they go sideways. 3 possibilities: up, down, sideways, up, down, sideways. That's a simple rudimentary mechanism. But I am the last person on planet Earth that will tell you that this activity called day trading in particular is easy. It's not easy. In fact, it's one of the most challenging activities you as a human being will ever pick up. Do you know why? Because in order for there to even be a hope for mastering the market, you have to first master yourself. And let's face it, how many people actually master themselves in this world? How many people actually reach a point where they do what they say they're going to do? How many people really keep their promises to their kids, their wives, their husbands, their community at large, their societies, their personal God? Very few people reach the point in their life in anything where they have accumulated or accomplished self-mastery. But the only way to have any chance at success at this is to first master yourself. You can't take an unmastered you into the market and think that there's going to be success in the market. You can't take an undisciplined you and go find success. You can't take an untrained you and go into the market with your untrained self and think that you and your untrained state is going to pull money out of the markets. Won't happen. You can't be an ill-informed individual and take your ill-informed self into the market and pull money out of the markets. You can't take your unmastered self. You can't take your undisciplined self. You can't take your untrained self. You can't take your uneducated self. You can't take your uninformed self. You can't take who you are right now without changing yourself first. You can't take who you are right now and take who you are right now in the market and expect the market to give you money. So what must happen? You must first change. You must first go through a metamorphosis. You must first become educated. You must first become discipline. Discipline is not something you're born with. It's something you work on, like your muscles. You got to hit this thing up every couple of days, every day of the week, if you will, to build that muscle, to build that capability. You have to work on becoming disciplined. You have to work on becoming educated. You have to work on becoming experienced. This work happens first. And it is this work that transforms who you are. Then you take the transformed you into the market, and it is that transformed you that starts producing progress. But if you think that you can stay who you are without putting work into creating the change you need in yourself, if you think that there's just, I take this 2-day course and I go into the market, 2 days, it's not enough to change who you are. Take this 2-day course, go into the market, open up an account, and I should become rich in the next few weeks. then you should really find another freaking planet to work on, because you are living somewhere in outer space, not here on planet Earth. I don't know about any other planets, but that doesn't work here, not on planet Earth. I have yet to do intergalactic travel. I'm waiting for Elon Musk or somebody to make that possible. But until then, I only know what the situation here is on planet Earth. This industry has a 92% failure rate, largely because people don't want to go through what it takes to become someone different first. They want to stay who they are and take who they are into the market and take the market. It will never happen. My mother used to say, Oliver, never say never. Oh, never say never, Oliver. Well, I'm telling you, Mom, sorry, never. Let me say it again. Never. All right, guys. I know I'm silly, but it's a point worth. I'm telling you, it's a point worth belaboring. All right. 92% failure rate. Get it locked into your head. Most people know nothing about financial markets. They think they do. Oh, well, the market goes up and the market goes down, right, Oliver? That's it? Yeah, that's pretty. Most people know nothing about financial markets. That's a con. And here's another big one, guys. Success comes after experience, and experience takes time, years. You can't be an experienced trader in 2 days. You can't be an experienced trader in 2 weeks. You can't be an experienced trader in 2 months. Becoming experienced takes time. You can't cheat experience. All right? Anything good that happens before you are experienced is called luck, traders. Only what happens after experience can you claim as yours. Listen to me carefully. You can't become successful before you become experienced. Get this in your head, people. You cannot experience true, real success before you become experienced. True, real success comes after you become experienced. And what's required to become experienced? Time. This is what people do not want to put into this. They want a microwave. They want a microwave results. Can I have my gourmet meal in 15 seconds? No, you cannot. This is the #1 reason why there are so many scams in this industry, because these scammers, right, which even I, believe it or not, have been accused of. Are you kidding me? Putting this truth in your face? How? But this is the #1 reason that scammers in this industry get away with their scams, because they sell you on the idea that anyone can do this. They do not tell you that 92% of the people are going to fail. They do not tell you that this is difficult. They do not tell you that you're going to fail first until you become experienced. They do not tell you that experience takes time. They do not tell you that success happens after experience. And before your experience, you're going to be a loser. The reason why, how many people are in this room? There's 427 people in this room instead of 40,000 people in this room. Do you know why? Do you know why there's only 400 people here instead of 40,000 people? Because I tell you this truth, 92% of you are not going to make it. There's only 400 people here because I tell you that success comes after experience. There's only 400 people here because I tell you that experience takes time. There's only 400 people here because I tell you what's real in this industry. If I went at 40,000 people in this room, I would constantly preach from every podium I can that everyone can do this, that you're all going to be successful, that it doesn't take time. Just follow these 3 things and get rich. I would have 40,000 people in this room. but I will never do that. You learn how to win in this business by first learning how to lose. Can I repeat that for you? You learn how to win by first learning how to lose. What does that mean, traders? You're going to lose first. What does that mean? You are going to become an expert loser before you see a single dollar, before you get winning trades consistently, before you call yourself a success, before you start to support yourself with this activity. You are going to be one of the greatest losing traders you have ever seen. You're going to become an expert at losing. You're going to become so intimate with losing, you're going to feel like this is just your natural state. You lose your way to success in this business. There is no way to win first, because winning doesn't come before your experience. Experience comes after you have lost tens of thousands of times. Guys, listen to me carefully. I get very, very emotional about this, and I apologize. It's just the way it is. It's just me. I get emotional about this because I need all of you to understand this. There is a direct link between how much you lose first and how successful you are later. And isn't it ironic that what all of you are trying to do is you're trying not to lose the very thing that you need to do. The very thing that you need to do now is to lose as much as you possibly can to get the losses out of the way now. You don't want the losses in the future. Just get the losses out of the way. Become so intimate with losing. Become so intimate with every possible error, every possible mistake. Know it like the back of your hand, so that at some point, the market can no longer fool you. The market can no longer trick you. The market can no longer surprise you. You've been there. You've done that. You know every possible mistake that can be made. You know every possible error, every booby trap, every dead end. The market loses its ability to punch you without you seeing the punch coming. How do you get to that state? You become an expert loser. Why is this a con? It's a con because most people don't have enough money to get through the losing period that happens first. First of all, they enter the game with this Mickey Mouse Disney idea that I'm supposed to win from day one. This is not Disney World. I'm sorry. This is not a Disney movie. This is real life. It is impossible for you to win until you become experienced. And it is impossible to become experienced until after you have become the #1 expert at what? Losing. How does a baby learn to walk? By running first? Wait, I'm going to learn to walk by sprinting first in the Olympics. Then I'll learn to walk later. No, a baby learns to walk by first trying to stand and falling. Standing, falling. Trying to stand, fall, 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 fall less. Fall less. Stable, don't fall often. Take a step, fall. Take a step, fall. Take a step, fall. Take 2 steps, fall. Take 2 steps, fall. Take 3 steps, falling, 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 until the baby becomes so intimate with falling and all the reasons for falling that he naturally starts to avoid the reasons, but not before becoming intimate with every possible way to fall. Doctors tell us that parents who overly protect their children from falling wind up with clumsy kids. Zero athletic ability because they weren't allowed to fall enough. You lose your way to success at this business. Why is this a con? It's a con for 2 reasons. Number 1, most people start off with a tiny bit of capital, and then they lose it because the first period has to be lost. The first period of a baby learning to walk has to be falling. You're always bad at something in the beginning. Always. First time you pick up a basketball, you're horrible. First time you put a golf club in your hands, you're really horrible. My golfers out there know that. The first time you try to kick a soccer ball and control it, you're horrible. The first time you try to walk, you're horrible. The first time you try to talk, you're terrible at it. You are bad at everything you start off, but somehow when it comes to this activity called day trading, that all of your common sense leaves your God-given head for some reason. And for some reason, this is the only activity that life is supposed to be different. No, I'm supposed to be good at this from day one, right? Really? You don't apply that common sense measure to anything else in life. But when it comes to this, you expect to be good right away. You expect not to fall. You expect not to lose.
Okay, I'm going to cut it short. I think you guys get the gist of what my man Oliver Velez is saying. You know, I have a rhetorical question. When is the last time you heard that, right? When is the last time you listened to this message? When is the last time that you've put any work in on yourself? Do you even know how to start working on yourself? Right? If you want to change, you have to do different things, okay? If you want to be a disciplined trader, but you have no discipline in your life, you're not going to be successful. And you know, I don't have any qualms in telling you that. You can come and you can listen to the message every week. You can watch, you know, whatever videos you want to watch. But until you employ some strategic changes in your life, you're going to fail. And that's the ugly truth. You're going to fail. You're going to fail because you did not set any controls in your life to prevent failure, right? If you're a cheater, you know, if you're somebody who goes out and cheats in relationships, you don't just stop doing that. Like it requires some work. And I know because I was a cheater. Okay, this requires work. It took some work to become a cheater, right? And you could blame it on whatever situations, hurt or whatever, but it took some work. It wasn't a natural thing, right? If you have a bad diet, you worked on that bad diet. We all learned the basic food groups. If you were a workout rat, a gym rat, you've developed that. You developed a routine around the gym. I don't care what's going on. You get up at 5 in the morning, you head to the gym every morning, right? If you don't go to the gym, you're just not going. So, and you develop that. You get up and you turn that TV on. You flip through your shows. Whatever you do, you develop it, right? If you have a show that you watch, you'll leave church early to get home and watch your show. I know, I like the NFL, right? So what I'm telling you is, I don't want to hear your excuses. Excuses are like buttholes. Everybody has them and they all stink. So I'm going to tell you the real deal, right? If you want to become a successful trader, you will become a successful trader. I can't stop you. Your husband can't stop you. Your boyfriend, your kids, none of that. They can't stop you. I was working a job that I absolutely hated. It required 12 hours. You know, I could I could work from my house, all right, but it still required me to be involved for at least 12 hours out of my day. And I learned how to trade, you know, in part because I understood discipline, right? I was used to a regimen, right? You know, people who know me personally can probably say that I have some personality traits that lend to that. You know, I don't need a lot. You know, I don't have a lot of requirements. I'm not involved in a lot of social circles. I don't need to have, you know, 5 to 15 pairs of tennis shoes. I don't need to have the latest rims on my car. I don't need to have any of that. So the discipline that I can set in place is totally different than the discipline that you might set in place. All right. My diet consisted of, until earlier this month, chicken breasts and broccoli. All right. Those of you who know me know that chicken breasts and broccoli. Who can do that? Who can actively do that? How many times do you eat out? How many times do you cook for yourself? How many times do you reward yourself by going to the movies or buying shoes, clothes, getting your hair done, getting your nails done? You want to become a successful trader? Cut all that out. Cut all the fat out. Just live with the basics until you get trading right, until you're disciplined enough to do what you know needs to be done. You want to be a great trader? Don't speed. When you get on the highway, drive exactly the speed limit, the exact speed limit. Do not speed. That's going to require you to get up early. I don't care if you're late. I don't care if you're in a rush. Drive the speed limit. You want to become a good trader? What are you willing to give up? What are you willing to give up? And you don't have to tell me about it. I will know. The people who succeed in this are the people who are willing to make sacrifices. You have to sacrifice your comfort. You have to sacrifice your losing ways. You have to sacrifice your pride, your personal thought process. You have to go to people who have become successful, right? You have to do things that will make you successful, that will lend to your success. And there should not be a stone that you're willing to leave unturned, because it's the same with anything in life. If you've been to college, right? There are several different excuses. A lot of your college classmates went to party. They went different places. They did different things. Some of them had rich parents. You had to do what you had to do to get by in college. What was your college diet? How many of you would go back to eating what you ate in college, or living the way you lived in college, or cramming for whatever exam you needed to do, right? You did whatever you had to do to make it through college. Basic training in the military. How many miles did you run? Was it cold outside? Because I froze my butt off. I had to wear shorts and t-shirt because it was April 1st, right? So what I'm telling you is, a lot of you are willing to give me excuses. I don't care about those. I got it. It's life. We all have life. You might not be a successful trader because you're not willing to take a knife and cut your life up. And that's what it's going to require. Some of you guys have relationships, that are going to get in the way of trading. I understand that. You'll have to weigh that relationship and your financial future. Sometimes they're going to be, they're not going to be aligned. Okay. So what I'm telling you is, most of you probably have the knowledge that will make you successful in the trading business, but you probably don't have the discipline. Okay. So if you're looking for what's holding you back, look no further than yourself. All right. And if you are a person who can be disciplined, and I know several of you that come to mind who can be disciplined, it's just about you doing it, right? Do it. Cut the excuses out. Work on what you have to work on to become the trader that you actually want to become, okay? I want to hit this outline real fast. I want to talk about mastering yourself, okay? Mastering yourself requires action. That's an action word, right? Put things in place that make you successful. Do required readings, do exercises, write down the number of trades. How about taking 2 trades a week and see if you can succeed? All right, if that's too many, take 1 trade per week, see if you can succeed. So if you can do that, all right, if you're willing to do that, it's going to help you. Get you a mentor, right? Mentors, whether they know you or not, like Oliver Velez can be your mentor. Jessica Lane, whoever, get a mentor, follow what they do strategically. Do required reading. If you have shortcomings, actively work on those shortcomings, right? And the reason why I always bring up diet is because I think most of you aren't willing to cut down to the basics in your diet. And for me, that'll tell me everything I need to know about you, right? A diet is something that's so simple that all of us can do it, right? I mean, food is expensive anyway. Just go get you a pack of chicken breast and some broccoli and call it a diet until you get it right. It's boring, it's bland. You're going to have to come home and prepare it. And it's uncomfortable, right? It's more comfortable. It's more comfortable to go to Chick-fil-A or Cracker Barrel or wherever you enjoy eating. That's comfort, right? It's more comfortable to go buy your kids something to eat. It's not comfortable to come home and prepare your meal ahead of time. If you meal prep, right? That's not comfortable. It's not what you enjoy doing. But that's exactly where the growth happens, right there in that place of discomfort, right? Growth doesn't happen driving into Chick-fil-A or the Cracker Barrel. That's not growth. That's laziness. That's complacency. That's not going to help you. And that's exactly why you will be comfortable going to work for the rest of your life. And there's nothing wrong with that, right? Like my parents went to work their entire lives, right? So I'm not knocking that, but what I'm telling you is if you want different, you must do different, okay? And that I think you would require different, from a guy. I was a cheating dude for most of my life, and I could never get the girl to just allow me to cheat and be okay with it. Just be comfortable, boo. I'll be right back, right? It's not how it works. So if you want different, be different, do different, be comfortable being uncomfortable, grow, right? Okay, before we played that video, I hit on everything you needed to have to be successful, right? When we go and look at these charts, all right, I want everybody to keep in mind the order block concept, right? The order block is created. The next candle, we want to be wicked into the trade, and we want to take the trade down to either equal highs or equal lows. We'll partial out, and then there'll be a risk-free trade to the next order block, right? That's the standard formula for success in a smart money trading environment, right? If you don't trade smart money, and some of you don't, that's fine too. I don't know your winning criteria that's around your strategy, right? I don't understand. I don't know your concept, right? Your trading concept if you're not trading smart money. I was semi-successful in smart money. It just I didn't have the consistency that I desired, right? I was able to qualify an FTMO account trading regular retail style trading, but I didn't get the consistency until I switched to the smart money over the summer. Okay, so the concept around order blocks is pretty simple. I want to see an order block form, whether it's bearish or bullish, and the next candle is either going to put me in the trade or I'll just wait until the next setup comes, right? If you can live within that concept, you'll be wildly successful, right? Now you can have a strategy put together around that concept, right? Your strategy is how you employ that, right? It's, I'm going to drop down to the 5 minute or the 15 minute after that order block is formed and the price wicks into my area. I'm going to watch for a break of structure and a retest, and I'm going to enter the trade as soon as that new order block is formed, and I'm out of there, right? That's a strategy that is formulated around the concept of order block trading, right? The easy money strategy that I have, right? It's formulated around the idea that price has to retrace on every time frame. Price has to retrace on every candle. If you're looking for healthy price action, right, then you understand that when the new candle opens, you're gonna have a wick that goes and tries to connect with the price from 2 candles prior to it, right? That's healthy price action. And there's a strategy that's formulated around that. That's where I get the easy money strategy from. So if you understand the concept, then you can always employ a strategy to go with that concept, right? And no strategy is going to be 100%. You're going to lose some trades, right? That's where your risk management comes in, okay? So if you win 3 out of 10 trades and you have great risk management, you're going to be a successful trader, right? That's how I was able to quit my job. That's how a lot of people in this group who are successful traders, that's how they survive. That's how they're able to fund their life, right? Is because they understood the concept and they formulated the strategy that made them successful within the constraints of that concept, right? And we have that. Several people have that in this group. So if you want to understand that, all you have to do is ask people. They will definitely volunteer. I talked to Big Shell yesterday. If you want to know the basics of trading, that guy has a lot of knowledge, right? If you want to know trading basics, right? If you're brand new to trading, reach out, man. Touch these people. Do not be a member of the group that doesn't talk to people. You're not going to benefit that way. There are some very knowledgeable people who have a lot of great sources and a lot of great resources that you can tap into to get the education you need, right? All of us aren't going to learn the same way. And sometimes you can't understand it from one person, but you can understand it perfectly from someone different, okay? So I just want to encourage everybody to be active, within the group, okay? I appreciate what everybody brings to the table. If you need assistance, reach out, man. I would be happy to engage with anybody, and I learn every time I engage with people, right? Because some people bring up different points. I basically detailed why you're unsuccessful at trading, right? I think this article that I posted is pretty much in line with what I was bringing up. So I want to get into some charts, right? I got a few easy money setups. The euro and the GBP crashed last week at the start of this war. So it brings us some great setups. Can you guys see my, no, you can't. Now you can. Now you can. All right. So we have a couple of unique situations. Monday will be the end of the month. I don't like when the end of the month lands on a weekday. I like it when it comes on a weekend. But the end of the month, I like to look at the monthly candle because the monthly candle is going to retrace just like the weekly candle and all that good stuff, right? So I'm going to expect a pretty decent retracement coming up in most of these pairs, all right? The first week of the month is generally not the easiest week to grab a bunch of pips. So this easy money strategy, I rely on it more the first week of the month than I do in the latter weeks. All right, and that's because of NFP. A lot of pairs may move a little bit differently until they release the NFP data. I'm going to ask a rhetorical question, like, how many of you have traded through war before, right? And I say that because I haven't either, right? So this is a brand new environment. This goes directly with what Oliver Velez was saying. This trading that we're doing this week, last week, this is our first time doing it. We have zero experience trading through war, right? Last week I brought up the fact that we may not be able to hold trades as long, as a swing trader. I'm a swing trader, so I might have to adjust, how long I hold my trades, because maybe they don't last as long, right? And that was true. I was in a UJ trade that it hit an order block. I want to say by Tuesday it hit a daily order block. Wednesday it went right back up. So Thursday it hit that same daily order block and rejected, and I just so happened to be up, at like 2 or 3 in the morning, and I took my profit, right? And I went to sleep. I woke up, it had retraced so far that I would have basically lost money in that trade, right? And a couple of people that I know did lose money in that trade. I don't know why. I can't tell you why I pulled the plug on that trade. I just, the first time I saw it at that order block, I was cool. And then the next day when it retraced from that order block, I was kind of salty, right? And I was trading, with my old brother-in-law, and he scales in and he takes profit. I mean, he does it better than I do it, even though he hasn't been trading Forex that long. So the next time I saw it down there, something told me just to take my profit. I figured I would scale in if it goes back up. And it just so happened to be the right call. It was the only reason why I was able to make money with that trade, right? The second trade that I had was GN, I believe, right? I expected GN to give me some easy money last week, and it didn't. I think I expected it to retrace further up than it did. Maybe I expected it to retrace here. You see it didn't go that far up, and it switched. It came back down. I still was able to make money because, I hedge. But my point in saying this, guys, is even if you got in for this retrace, right, and it went these 61 pips, when you saw it turn and start coming back, if you take your profit, that's still, you're still taking your profit, taking your, that's extra pips, basically. You still shouldn't allow this to come back and stop you out, right? The easy money strategy is based on the concept that you're going to have healthy price action, right? In this case, you have healthy price action because you have healthy price action is determined by 3 candles, right? So you have this candle, you have this candle, and you have this candle. The price overlaps. There's no gap. There's no fair market value gap. There's no imbalance left, right? This week, price would have to retrace all the way back up here before it pushes down, right? I'm going to use this, the same pair. I'm going to try to employ the easy money strategy, right? I'm going to measure from this wick to this wick. And it's saying that price should come here and still leave an imbalance. This is my golden zone. This is my target area. If price does retrace from here to here, you can see that's a 207 pip move, right? So that's what I'm shooting for. That's the move that I want to happen. This is a smart or easy money strategy trade that I'm looking for coming into the week. NFP week, if I can get this 200 pips without having to do any work, I'll take it, right? Now, if I'm just setting this trade up, it's about a 4-to-1 RR. My stop loss would be right above this wick, right? Or right below this wick, and I would take this trade up. Now, when the market opens, this candle could push a little bit further down before it goes up. We have an hour, right? While the spreads are high, we're going to have an hour to watch this price. Sometimes it just opens and it starts pushing up. And that's awesome. So if that's the case, we'll just hop in and we can ride the trade up. Sometimes it's going to open and push down first and then push up. If it opens up and it pushes down first, I would tell you, you can't just hop in the trade for a buy while it's pushing down, right? You want to wait. You know, you can scale in and try to see where there's an order block. All right. And when I say where there's an order block, maybe in this candle somewhere, there's an order block, you know, on the lower time frame that it's going to react off of. And that would be your POI, your point of interest, right? So if you look at this, just me looking at this with the naked eye, you know, because I have a homegirl named Des, I know Des would tell me that this is an imbalance right here, right? So maybe price will cover this imbalance before it turns around and goes up, right? I'm not just guessing, guys. Like, I'm still employing my knowledge of how price moves and why price is moving that way, right? So if price does push up this way, and y'all hit me up like, Todd, man, I thought you said the price was going to go up. It is. It's going to go up. But, you know, let's understand what's going on. Like, we still have to use our skill set, right? And as traders, we understand that there's an imbalance here that price might push into before it goes up, okay? And that should be great news for all of us, because that's more pips for us on the way up, right? And if not, maybe it'll just turn around and head up from here, okay? So just understand, this is what I mean by the concept, right? The concept of this easy money strategy is that we're going to get a retracement from this candle, okay? But just because it closed out here this week doesn't mean it won't push and totally close out this imbalance, right? Before it goes up to the top. I just want us to have a realistic view of how the market is moving and why it's moving there. And I know some of you don't know that, right? That's why I even pointed this out. But there are several different trades that are going to offer us a lot of pips, you know, as far as retracement. We got GN. I got over 200 pips on that. GC, that's GBP CAD, is 160 pips. And GA is 173 pips, right? Those are all trades that I'm personally looking at for the easy money strategy. My trades of the week, right, that I'm interested in taking to the top side are both Euro trades, okay? And those Euro trades are based on the concept that ICT teaches, right? Both of those trades took out swing lows, okay? What do I mean by that? Okay, this is the daily candle, the daily chart. Okay, if you look at this daily chart, and I'm going to get you some history here. Price, the previous low here was January 2022. It was about 102.97, right? So here last week, price dipped below that swing low, right? It dipped all the way down to 102.83. Price has not been this far down since January 5th, 2015. Okay. What does that tell you? That tells you that the market makers took all of the sell side liquidity, any stop losses from big institutions or from traders that were buying this market. You know, anybody who bought this market up that had stops down here or sell stops, maybe to take this lower may have been activated, right? So all of this liquidity was sucked out of the market. And when that happens, when you see that on a daily chart, according to the concept here, is we can expect the market to cascade the opposite direction. Okay, that happens both on sell side liquidity and buy side liquidity, and ICT calls this stop runs, right? So they did a sell side stop run to take out the sell side liquidity. The market is going to cascade to the opposite direction. I'm targeting at least these highs. I personally think that it's going to probably start running all the liquidity, right? That's what the market does. It runs liquidity. So it took out all the liquidity down here. Where does that leave liquidity? All buy side, right? There's all this liquidity on all these highs, right? So that's what I'm looking at. And of course, this move all the way up here is not going to happen in 1 week. This is a 214 pip move. I'm hopeful that I can get all of those pips this week. You know, we have to keep in mind that we are at war. Euro doesn't typically do well during wartime. And it's NFP week. But I'm still going to trade the concept, right? The concept is that when you run sell side liquidity, the market is cascading to the top side. This is the other trade, same difference. They took out sell side liquidity here. Market cascades up, right? If you put a fib from this first move, I'm fibbing this candle right here. I know it looks like I'm fibbing this one, but I'm just moving the cursor so I can see it. Okay, I'm fibbing this candle. I'm fibbing from that low to these highs, right? Price went up, it came down into my golden zone, right? A little bit past the golden zone. Now I'm expecting the market to push up. Whenever this move first happened, those of you who were with me in January, I told you that I thought we would end up targeting these highs. The last time the market was up here and it ran the buy side liquidity, it cascaded over 1,000 pips down here to the bottom, right? So I told you I thought we would target these highs first, and then I thought we'd target these highs, right? And it did exactly. It targeted these highs first. I know Stephanie caught all of these pips. I didn't catch all of them. I caught a lot of them, but now that the market pushed back down to this level, I think it's at an area that it's going to turn and head back up to the top side. It will run all the liquidity on the buy side and push up to the top. So as a concept, that's what I'm looking at, right? Now I'm not just going to hop in these trades just for buys, right? I have an entry criteria the same way you should have entry criteria, right? Since these trades are selling, or since these trades were selling, what do you want to see, right? You want to see a break of structure. I'm just scaling down these time frames so I can see if I have any bullish OBs forming, right? This is a bullish order block. It's been respected. None of these lows have violated this low wick right here. So if this holds, then maybe the market will push up, right? That's what I'm looking for. And maybe I will enter this trade when I get a BOS, a break of structure, because I got a homegirl named Alicia that would put a little trend line on this thing, right? Price should come up here. It's going to break structure. When it breaks structure, where's the ABC? Okay. When this price breaks structure, it's going to retest. It's going to go to the top, right? On this retest here, right? You're going to get an order block, a bullish order block. That's what this retest is going to be, the down candle and the up candle. There's your entry. Take that thing to the top side. We in a trade, we ride, okay? That's a very rudimentary explanation on how to enter the trade, right? On how to execute entry on this trade idea. And it's based off of the concept that the market has sucked the liquidity out of the sell side. All right. It had its initial surge. It retraced, right? It's back at the discounted rate. Now we look for the market to turn and take off back to the top side, right? So does anybody have any questions on the concept and my entry criteria? I think sometimes I get a lot of questions about entry and that sort of thing. And I want to make it crystal clear that I'm not just hopping in a trade, you know, when the market opens. Now I do hop in a trade when the market opens, right? But I'm telling you how I hop into the trade, what I look for to hop in the trade. All of us should have those same requirements, okay? And if you don't, then I would tell you that's why you go into drawdown like that, right? Now, sometimes it's going to turn and you get the break of structure. It might go up, it might hit an order block or something and pull back. Hey, I mean, that's going to happen, all right? Because maybe a higher time frame order block you missed out on or something, and it pushes back and it eventually goes up. But I just want you to understand, if you have that criteria, if you have that stuff, you need to write it down, have it by your computer, look at it, you know, make sure you check those blocks before you go up. TT. You can do it on the 15-minute, you can do it on the 5-minute, whatever. That's what I mean. If you want to do it on the 15-minute TT, do it on the 15-minute. All right. The person that does it on the 3-minute is going to have a better entry than you. Does that make sense? The person that does it on the 1-minute is going to have the best entry. All right. Now, the person who does it on the 1-minute has a better chance of getting faked out than the person that does it on the 15-minute. Right. I just want y'all to understand that there is a concept, right, that's rock solid, and you can go back and you can back test this concept, right? Price comes up to the high. You get 322 pips to the bottom. I don't care, you know, it ran this high right here, right? 322 pips. I can eat off 322 pips. Price comes up, runs this high. 316 pips, 313 pips. Price comes back up to the high. It doesn't quite run it, but it's back at the high. 932 pips. There's a concept here, right? Now, you can, I don't know. I mean, you can nitpick me on what my entry criteria for any one of these trades are, right? And I don't even care, you know, whatever your entry criteria is. The point is, if you entered this trade, you got paid, right? That's my point, right? Practice is going to make perfect with your entries. That also works. Practice makes perfect with your exits. Even if you didn't get 323 pips on this first move, if you got 300 of them, you're eating. You know, if you took profit down here at this equal low right here, you took it like partials and you let the trade run to this level and you didn't get this wick, that's successful. That's success. You have to define your success, right? You're not always going to get every pip available. If you took this trade down to equal lows and took partials, then price wicked up, fell down here. If you were just looking for this as equal lows and you got it right here, that's success. It created another order block, price fell. Even if you didn't catch the rest of this move, right? It's success. You got 3, 6, 900 pips all over the course of a few months because you recognize the concept. Hey, they ran the liquidity up top. They ran the liquidity up top, right? Because each time price came back up here, it ran liquidity. It ran this liquidity. This move ran this liquidity, right? So the concept is there. So I say that to say this, right? We have two opportunities that we can trade this on. They ran liquidity down here. We called it out January 20th. Price ran up 500 pips. Asked Stephanie how she felt. She felt great. She caught every one of those pips, right? Now price is pulled back into our golden zone. We can expect price to push off again. Maybe y'all can be the next 500 pip winner. Euro Chef. My son called this one out. We ran liquidity. We posted it in the chat. And the next day, those of you who are in it caught these 74 pips, right? It's going to keep going up. I want y'all to understand that the concept doesn't change just because you enter the trade, okay? It's the price is going to do exactly what we think it's going to do. All you have to do is be along for the ride. Be strong, hold your ground, make your money, right? Understand the concept, all right? If you employ these concepts, you will be successful, right? You just have to hold your trade. You have to manage your risk and you have to practice, right? Practice doing the right thing. Don't enter 30 other trades. Just because pips and dips is scalping gold, don't mean you need to go scalp gold. If you're in the trade, trade what you trade, stick to that trade, right? Less is more. Take 2 trades this week. Once they're risks free, then you can open your eyes to a lot of other stuff. You know, some of y'all trade the same way I was dating women, right? Less is more. Less is more. You guys have any questions?
I don't scalp, Todd. This is tips and dips.
Well, you
I'm
maybe you
getting
don't
my
scalp.
nails done, so I couldn't type.
You intraday trade. I'm sorry, Tim. But you
But I did have a
Go ahead.
question about your fib. So your fib is missing. I have a mask on, so if you can't hear me, I didn't see the 0%, so I don't see how you draw the high. So you start from 100 with the low, but you don't have 0 on your fib. So how do you
Okay,
spot the previous high?
let me pull out my fib. I will show you my exact readings. These are my exact readings. So you said, how do I get to the high?
Yeah, so one is, so say this is a buy, right? So the 100 starts at the swing low,
Right.
and then the 0 to me is supposed to be where your 100 is if you were, so like start it from the bottom. So the 100 goes there, right? And then where
So you-
you're, so you, all right, so you just stop it without having the, so that's where the 0 would be. Got it.
yeah, the 0 will be at the top.
Right there,
I mean,
right.
you
You
can,
don't
just
have
because
it.
I don't have it labeled, and honestly, I only have this fib reading like this because I got mine from J Take Profit. But you don't, in my opinion, you don't need the 0. I mean, we know where the top of the market is. And the way that a lot of people use these fibs is that they're going to take profit at the negative 27, right? Is
Right.
that what you do?
Or I haven't used it really in a minute, but when I did, yes, profit was TP1 is negative 27, 2 is negative 61.
Right. So honestly, I used to do that too, but because I adapted smart money concepts, I'm going to take profit. My first TP is going to be here, and then I'm going to let it run, right? And instead of using this right here, I'm gonna pay attention to the order block. So in this case, I would probably use this as a take profit versus this.
Right.
Either
Because it's the
or this
equal
side.
high.
Right.
Right.
So
Mhm.
yeah, I don't use this. I mean, I don't think it's anything wrong with it if you did. You know, I think price is going to end up pushing. It's going to run all these highs. But you know, if you just want to use an arbitrary place to take profit, that's fine. Or you want to use these lines to take profit. I was successful doing it like that too when I first started. But I just started using equal highs when I adopted the smart money concepts.
Same thing. Yeah, I haven't used the fib. I was just trying to figure out how you drew it. So that's all.
Right. I do swear by the fib though. I'm not gonna lie. I love the fib to measure retracements because I think it's important to know where the discounted levels are. Do you care about discounted levels?
Explain what that means.
So discounted levels. If you when you start studying smart money, let's say price goes from here to the top, right? And let's say you were a trader. Smart money buys here, they take profit here. When they take profit, the market starts falling, right?
Mhm.
So they're not interested in getting back in here for a buy until it crosses past the 50% line. That they got a 50% discount, right? So if you're buying this pair, you're not going to buy back in until you get it at a discounted level. And that's the 50% line.
Got you.
Once price crosses the 50% line, smart money is going to get involved again, right? So it pushes
Yeah.
back. The guy ICT doesn't want to get involved unless price comes back to the 78% level. But smart money can get involved anytime price pulls back to the 50% level. So you know, just like I do, if institutions are buying or selling a currency, everybody is not going to get the same rate, right? So anything past the 50% is discounted, but maybe a larger institution will get the best rates because they can manipulate the market more. They have more capital, so their manipulation may be more than somebody that doesn't have quite as much, right? Maybe Swiss Bank can influence the market more than JP Morgan, right? Because maybe they're trading with a larger amount of capital. So maybe they get a better rate. You know, maybe they get in at the 78.6 and somebody else waits because they don't have as much capital, and as price starts going up, they buy too. So they might not get in until closer to the 50% mark. Does that make sense?
Yes, it does.
So Pips and Dip says she don't scalp, y'all. She intraday trades. That's scalping to me. I'm a swing trader.
No, that's not what scalping is. You can't just
Hey,
redefine scalping because
but
you're
listen,
a swing trader.
I'm still waiting on you guys to give a class on how y'all use charts at the 4-hour level. I think a lot of people in this group really want to see somebody break charts down on the 4-hour level. I just don't go that far down. Does that make sense? I'm going to see if I can get somebody who will be willing to get on Zoom and break the charts down. You know, Outline Ruby from the 4-hour time frame. I think we have a lot of people that trade like you, you know, on that time frame. I would be interested in doing it, you know, especially during these war times. I think I would be my rate of success would be higher, right? Because you're in and out of the market before it changes directions. I agree, Sean. The 4-hour is confusing. I didn't find success until I started trading the daily chart, and I didn't find the daily chart until I listened to the Trading Nut podcast. It was a guy named Anthony Williams that explained the charts and what charts he used for what. So I found a great deal of success on the daily chart. And that was when I was just trading price action and market structure, like with candlesticks. The only thing with that is a lot of times you get wicked out of those trades. So that forced me to start hedging.
Todd, I think that was a great segue to my question, which was the hedging. I understand the concept. I know how to do it. My problem is getting out of the hedge, knowing which one to, like, let's just say they're both in the red. And you're seeing it go into one direction, but you're unsure if it's going to go back to that other one. So when do I cut that hedge off and let the other one run?
Well,
I hope that makes sense.
Yeah, it does. Let's talk about that. That's everybody's problem. That was my problem too. Let's use this exact example from the trade that we're anticipating, that I'm anticipating happening. Let's say you're anticipating the same move, and you hop in this trade and you hedge like I'm going to do. When I hedge this trade, my sell stop will go here, right? And the market is going to come down here. I'm expecting it to take off. Let's say it doesn't. Let's say it pushes down. And I don't care where it pushes to. I'm going to be in a 1% drawdown, no matter how far it goes, this direction or this direction. I'm going to be in a 1% drawdown until I start cutting off either side of the hedge, right? This happened to me last week in that EN trade, right? So I'm negative in my buy, but I'm positive in my sell, right?
Can you do me a favor and put your long position and your short position, just because I'm a visual person, if you don't mind?
I'll do that. Long and short. Now I know they have stop losses, but I don't have stop losses. So I want you to really kind of ignore where it says stop, right? Sean says, what lot size do I use? Which is another good question. I use any lot size I damn well please. And this is what I mean by that, right? My account is a 50K account, right? Right now, it's about a 86K account. So my math is the same as your math, right? You're going to take your calculator out, right? And you're going to take the equity of your account. Let's just use 86K, right? I'm going to times that by 0.01 because I want to use 1% of my account. So that's $860 that I'm going to risk on this trade. And in this situation, I expect price to come in, pick me up, and go up. This is a 7 pip stop loss. I'm going to round it up to 8 pips, right? So $860 that I have the risk, I can divide it by 8, by the 8 pips. So my lot size or the dollar amount per pip that I can afford to risk on this trade is $107.50. How do you write that? How do you write that in a pip formula, right? You move the decimal over 1 position to the left. So my lot size is a 10.75. Does that make sense?
No. Sorry, could you explain again?
Okay, let me explain again. Fifi dropped the pip calculator in the chat, and you can use that, right? I don't use it because if I'm ever in a situation to where I need to calculate my own pips, then I'm screwed. Now, here's the caveat that I have to that. I don't trade gold, and I don't trade indices enough to use that thing, right? But if I'm trading something that I'm not familiar with, then maybe I'll Google a pip calculator for that particular currency or whatever, that particular instrument. Okay, so let me break it back down for you. All right. Since I hedge, I can use any lot size that I want. All I need to do is find the dollar amount I want to use, and I can reverse engineer a way to find out what 1% is, right? But the easiest way to do it is you take your account equity and multiply it by 0.01 or 1%, right? So since my account equity is about 86K, I multiply that by 1%. And that's going to give me $860. So I need to spread my $860 over my stop loss, right? I can't lose more than $860. If my stop loss is 8 pips, I'm going to round this up, 7.2 pips here, but I'm going to round it up to 8. So I'm going to take my $860, divide it by the 8 pips that I need to cover for my stop loss, right? That's going to give me a total of $107.50. The number is going to be 107.5. That's a dollar amount that I can lose per pip. So if you multiply 107.5 times 8, it's going to give you 860, right? So that's 1% of my account. The way you get your lot size from that dollar amount is you move the decimal point 1 spot to the left. So $107.50 per pip is represented by a 10.75 lot size. Does that make sense?
Makes sense.
Okay, so let's say I get into this trade. And instead of the price doing what I thought it was going to, the price goes this direction, right? It comes down here and it bounces. It's going to come and play around down here. I don't care how long. It might play around here for 6 hours. The time is not the important thing, right? It's understanding structure, right? So if I see this come down here and it retests, what does that mean? It means we're going lower because that's structure. Here's an order block. We broke to the bottom side. It retests. We're going lower. Okay. I'm not going to panic, right? I'm going to look way over here to this side, right? And I'm going to find where the heck this is going, right? I need to find how many pips is moving to or whatever. Because I need to come up with a different strategy, right? If this is not going my direction, if it's sinking, Then I need to start shaving my buy trade-off. I need to start shaving pips from that because I'm negative here and I'm positive here, right? But I don't want to start shaving if price is just going to come down to this order block and then start heading back up to the top side. Right? Because if it does this, then I'm just screwing myself. So give yourself some space. If it's a move like this and it just comes down here and then it starts going back up, then I think you need to wait until you get a retest on the top side and then price starts pushing up. Then you can start shaving this bottom trade-off. The important thing you need to understand as a trader is, yeah, they might both be negative while it's in here, but you're still just down 1%. You're down 1% until you start cutting. You're only going to be down 1%. So make the trade declare which direction it's going, right? And I'm telling you, based off the concept, this trade is going to go top side, right? And I want you to think about this. EuroCAD has all week to head up, right? Even if it played around and bounced down here for 2 days, bounce, 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 bounce. I'm not cutting jack. I'm sitting in my trade. The bias is for this thing to turn and go topside. Once it turns to go topside, I'm shaving off the bottom. I'm not taking the whole 10.75 lot size and cutting it, right? I'm starting to cut. I'm starting to cut. You know, I'm shaving. Even when it starts heading in the profit, I might have a little bit of my hedge on, right? But once it retests and starts going up, then I'll cut more aggressively. Don't just cut as it goes up. And if it falls down, you're scared. You know, now you panic and you close the position out, right? Understand that price is still going to move, you know, and it's going to react to structure. And that's what you want to see. As a trader, you got to be comfortable with the retracements, you know, and you got to be comfortable with identifying when the market is creating higher highs and higher lows and then lower highs and lower lows, because that's going to tell you the direction that this market is going. And if you're on the 15-minute time frame, be comfortable with going up to the 1 hour, right? When you see the break of structure on the 15-minute, it needs to correspond, you know, as you go up in time frame. You need to see a break on the 30-minute eventually. And then you're going to see a break on the 1 hour, right? That's how you know that the trade is going this direction. And the same vice versa. When you see it on the 15-minute, eventually you're going to see it on the 30. Then you're going to see it on the 1 hour. That's how you know the trade is going up, is going your direction. Don't worry about getting every pip, you know, when you're in a hedge. Worry about cutting off your hedge once the trade starts cascading to the top side, right? And the most important thing about this is, as your trade starts going your direction, there's plenty of opportunities to add when it pulls back, right? So I'm not worried about the 10.75 lot size initially, right? I'm just worried about the move going in my direction. Once it pulls back, I can add, you know, I mean, and I can, once I add, I will move my stop loss to entry for my original position, because I only want to be risking 1%, right? You guys understand that?
Yes, I am so glad you did that visual because I was hedging wrong. Now that you did the, you know, the long position and the short position next to each other, how I was doing it, my long position and my short position, the red was equal. So that's
No,
why
yeah,
I was,
yeah. You can't do it.
you know, losing twice.
Right. So the way you want to do it is where your stop loss is, that's where you start your other position, right? A lot of times the trade won't even activate your hedge. Sometimes it will, you know, but the important thing is once it activates your hedge, you can't panic. All you're looking for there is which direction it's going. It's going to break in structure and it's going to head that direction. Once you get the break of structure and the retest, then you can start shading.
Got it. Thank you so much.
Anybody else? Fifi, I know you trade gold. Pips and dips, you still
Yes,
on
I
here?
do. Yeah.
Yeah, I'm here.
Do y'all have a gold outlook? You see,
Oh, no, I haven't analyzed yet.
that's the wrong answer.
Well, I haven't,
Y'all tripping.
I'm being honest.
Yeah, I always appreciate honesty. I'm giving you a hard time.
I have my little
I
analyzation.
could do it
Yes.
now with you.
That would be awesome.
Well, with your chart, yeah.
Here, let me just trash what I
Or
got.
Fifi could go.
No. By all means, go ahead.
Oh my God, y'all are scared. Go
I can't
ahead.
believe y'all are scared. I agree. Yeah, Des.
We could talk about it.
I'm just trying to see what we're reacting to. This level.
Can you tell me the date? It was last at that level.
Sweet Jesus. August 2020. That's the daily order block. Let me see about the weekly and the monthly. I did this kind of backwards, but
Yeah, I think it's the same on the weekly as well.
yeah, and that's really part of this bearish order block because
Mhm.
the wick is down here. All of that is really part of this super high here, July 2020, which makes sense, I guess, because of the war, huh? Is this as high as gold has ever been? It is.
Yeah, that was, I think, 9/11 time when I looked at it. It was the highest point it got to.
Wow. Wow. So it must be, it's gonna sell. See that shooting star on that weekly. Bruh. Bruh, I might have to sell some gold. I know there's some OBs on the lower time frames before this.
I was using my fib on the daily. So where that high candle is, and then where that low candle is right there. You're
So you
right where
see
your
it from here?
cursor is. Mhm. Yeah, from there all the way to that.
And it's probably gonna be right where I have him, close to 78.6 where I have him. This will be ICT's spot. Well, it looked like I missed most of the sale. Did y'all sell this Friday?
Yeah, I did.
Yeah, see, I don't trade gold like that. I just know y'all have there's a lot of people that do. I don't understand this pip count either. Is that like 145, really?
I just use
Oh,
that pip calculator because I don't understand it either.
Yeah, you divide it by 10.
So 145 pips
Yes.
to the golden zone. And if it goes further than the golden zone, it's 300. Woo, that's a huge pip count. Any thoughts on this, you gold traders?
So you were saying sell, well, you missed the sell to the golden zone, but I would look for a re-entry in that zone if it rejects
If it
and
rejects,
continues to buy, because it's in a bullish trend, right? That previous, where your zone is, that OB is a previous break of structure. And
you know what bothers
if it
me?
align, huh?
You know what bothers me is this shooting star on the weekly chart.
Yeah, see, here you are, the weekly. See, I don't know.
Well,
You know, I don't talk weekly. I don't.
I understand, but okay, this is my problem with looking at gold. Oh, I'm sorry. I shouldn't have cut you off. Go ahead and finish. Tell me what you were gonna say.
No, there was a car driving. No, I was saying that based on what you drew for the daily, in my opinion, I would either look for a buy entry in that golden zone order block because it's also a retest to the breaker structure on the left on the daily.
Okay.
But I would like to see. So if that would be my analysis based on what we're looking at right now, but I would of course drop down to the 3 hour for a day trade.
To take it back up here.
Correct.
I don't have a problem with that. I think that's likely too. I don't trade gold, but I think that's likely. And you're saying a retest to this area?
Hold on, it's a train. Sorry guys, that's the Bronx. So where you have A is a retest to the breaker structure on the left. Move the mouse
Right here?
over. No, too far, right there.
Okay.
So that's the retest to that breaker structure. So I would be in a buy.
Okay. I think that makes sense. I mean, I can follow it, even though I don't trade this crap. I just think that as a swing. All right, go ahead, Elfie.
I have to ask Chanel, where I don't understand the breakup structure thing. I don't see it.
So it's a buy trend, right? So from the bottom of the last sell candle, price has been in an uptrend. So when price broke above that previous high to the left, that's where the breaker structure for the buy trend came. Then price continued to climb up, create an OB, hit its daily high. It has to go back to fill that imbalance. Or like Todd said, it could be a rejection and continue selling. So it's just, it could go one of two ways. But for me, if I'm trading with the trend, I would enter if I see confirmation candles in that A zone that Todd has.
Okay, that's below the red line, okay. So
It's
is that
above.
the
It's
talking
above
about?
the red line.
Above or below?
Well, the letter is below.
Yeah,
but-
that's just the letter. Yeah. The
The-
whole box could be an area of entry.
Right. So the A zone is right here. It breaks the high right here.
Yes, and that's the retrace to the golden zone, correct?
Yes. This box is the golden zone.
Which imbalance are you talking about? That green candle?
Oh.
That wicket left at the top by B is an
This right
imbalance.
here.
Oh, the wick you mean is the imbalance. Okay.
Yes, because I'm looking at it. I'm looking to buy.
Okay.
So you're not trading on the retracement, like you're not getting in for those pips.
No, I haven't started that. That's what Todd is trying to convince me on the week. So that's why he keeps calling me out. No, I haven't done that.
Listen, I think this is perfect. I think you're exactly right. And I think it is going to go up here, but I think it's going to push down afterwards. When I look at something, I look at it for a long term. Like I don't necessarily pay attention to the short-term moves. That makes perfect sense. Because a lot of times when you get these shooting stars, the next candle is going to go back up, just like this one did, right? I'm just saying, when I see this shooting star, this price rejected this area that is always rejected, then the market is going to push back down. You know, I do feel like it's going to come back up here, just like it did every time. Like this shooting star, the next candle went back up and filled the imbalance, and it came down. This candle, it didn't necessarily do that, but I feel like in the long run, like over the week, I think it's going to push down.
even with the current state of the fundamentals
Well,
and the
I-
indices and everything else selling,
Well,
gold does the
I
opposite.
think, I
So-
think that, I don't know that this is gonna be a long war, you know, like there's some talk about Russia offering terms of surrender, you know, like, I don't know that this will be an Afghanistan is what I'm saying, right? If this extends out, then, you know, of course, market conditions are gonna change fast, but I mean, how much longer can Ukraine last? I mean, it's not like the US, Great Britain, or Germany are sending troops over there. They talking, all we saying is, hey, we're sanctioning you guys. I mean, that don't mean that. I mean, I don't know that this is going to be a long lasting situation. You know, I guess, you know, we'll all find out. But even if it just falls down, you know, to this area and keeps going up, it's still an uptrend, right? Does that make sense?
Yeah,
Yes.
Yeah.
So even if price comes down back to these moving averages, that would be a huge fall, but it still supports, you know, an uptrend. Price went up here, it fell way down, but it's still in the uptrend. So I'm just saying price can't just go straight up. It's going to have to come back down to earth, you know, even if it rises uptrend and it eventually pushes past the 2000 level again. But it's just not going to go straight up.
I have another question for Shayna, please. So when you trade gold, you look at the daily and then the 3 hour instead of the 4 hour?
I'll look at the 4 hour as well. I find the 3 and 2 hour, I see more order blocks than for me personally, but there's nothing different. It's just a matter of how you see the market. I'm still entering on the 15-minute time frame.
Okay, and you do work with order blocks. Okay, cool. I just guess I notice every time I look at gold, I get scared of all these wicks. It's so wicky for me. And I think I'm looking at it most of the time on the higher time
Yes,
frame.
it's very wicky, but
Yeah.
it does create good levels, which is what I've learned. So if you combine retail and smart money, gold does create levels that are areas of entry for me.
Okay, thank you.
You're welcome.
Hey, Elfie, I don't touch this stuff.
Like Oliver Bless said, we gotta burn before we
Hey,
can.
hey, man. Yeah, I've been tore up by gold, man.
I'm still looking at some, you know, that I actually like. I noticed I don't like GA anymore.
I don't know.
Yeah.
Gold is more respectful than Nas to me.
Okay.
Yeah, I only like the indices if they go in one direction.
I like SPX and I like UK 100. Can you do one of them, please? Or anybody do any of those indices?
Whatever, Sean. Whatever. Maybe you have to teach me.
Yes, I can do one of these Zooms for gold.
Sean, you can give a class for us on this on gold. You and Pips and Dips.
Like really low spreads, or at least I see a low.
I'm
spread.
not an expert.
But y'all don't listen. Y'all don't. I'm not an expert either. I just tell you what I think. So all of us have to. At the end of the day, we all have to do our analysis. But you know, y'all have to. If you guys have success trading it, y'all should be the ones that's breaking it down. I mean, I can't make sense of it. I don't trade gold, and the few times that I did, it didn't really end well, right? So I'm able to catch a trade or two every now and then, but I don't trade it consistently. You guys trade it consistently, and you do pretty well with it. So, like
You got to get off the weekly, Todd. Well, you're getting eaten up.
I'm with you. So, you know, that might be an issue. I don't try to trade gold from the weekly. I always analyze everything from a swing trader standpoint, but I'm not a fool. You know, I enter off the hour or you know, if I see order blocks on the hour or whatever, I can enter a trade like that. But you know, it has to be obvious, is what I'm saying. You guys trade it every day. I can only approach it from a swing trader standpoint because that's what I do. You know, like the purpose of me wanting this environment is to learn from you guys. You know, I can show you what I do and what I have success doing, but you guys can do the same thing for people who don't trade like you do. You know, so if I ever learn how to scout, you know, I know you guys don't scout, but if I ever learn how to scalp, I'll be dangerous. Or if I can intraday trade, you know, if I can switch back and forth, you know, successfully styles, then you can trade in any market. You can trade in any environment, right? Like I'm intelligent enough to understand that the environment has changed. This war environment is not allowing a lot of the pairs that I trade to be smooth rides. And that's not my comfort area. So I'll pull the trigger faster these days than I would have last month, right? But I will never learn if I'm the only one that's talking. You know, like you guys got to grab the mic and pull up your charts and show us what you see and how you see it, right? Like you don't need to know how I see it. I mean, the way I see it is not effective. You guys trade it and you guys have success. So if you pull up your chart and you show the group, then it'll be a learning experience and not like a guessing game. That's all I can give you is a guessing game. As a matter of fact, are you guys on a computer? Piston Dips, you're on a phone, huh?
Yeah, I'm on a phone. But to what you said, I think you're not giving yourself enough credit because the market is still the market. If you can read it, you can read any pair. You know what I mean? So
I do agree, but you're successful. You know what I'm saying? I mean, I can tell you concepts. Sean, I understand if you're shy. I'm not trying to pressure you into doing something you're not comfortable doing. But what I'm trying to explain to you is there's right now, there are how many people on this chat? 17 people on the chat who can benefit from your skill set, right? From what you do successfully. That's all. And you know, at some point, you know, hopefully you will overcome your shyness to share with people, right? So nobody's going to judge you. You know, like we all make analysis and sometimes the analysis is going to be wrong. But if we can understand how you view the market, it will help us in the long run as traders. That's all.
I agree. Because how you really explained it, I mean, that was perfect to me. I'm definitely going to continue to rewatch this Zoom just to hear you speak on it again.
I agree. I think that that's important, especially for people who trade it, right? I don't trade gold, but like when she explained, you know, the market going back and filling the imbalance, all that stuff, it made perfect sense. But since I don't trade it, then I didn't view it like that. You know, I'm looking at it from a swing trader standpoint. And, you know, you can get skin up if you try to hold gold and it goes in the opposite direction. I'll really be stuck in my hedge, you know.
Okay, let me say something. I'm gonna be honest. I was nervous as hell to, you know, do my strategy or whatever that I do, and nobody asked any questions and everything. So if I could make it through that, anybody can make it through anything. Because trust me, I was sweating because I get nervous talking to people when I'm trying to show them something. I get, you know, really nervous in a group setting. So if I can do it, everybody else can do it. I know they can. And that's all. Bye.
Sean, I already told you, Sean, we expect big things from you. Okay, let's talk about the this SPX. Des, do you trade S&P 500?
Oh, heck no. It doesn't give enough pips.
I know this is a trash can index, but We have.
I
people-
love SPX.
Gosh, you guys are wrong.
do y'all make money on this?
I do.
make-
I like it because it's a slower pace than Nas. I hate Nas.
Yes, me too.
Well,
Hey,
see,
but
once you start trading Nas, I find it slows down, but that's just me.
There's Nas don't slow down.
It's slow to me. It's like, okay, I guess because I do it so often, like every day, so I can, it just, I see it better. So it's slow to me now. And SPX, oh my God. I might as well
SPX.
stay there.
Index with training wheels, okay? We need some of those too.
Does anybody want to break this down? Or y'all want me to break it down?
You don't have to, you can do NAS as well, or like US 30. I just want to see another like order block strategy on an index. Or, just.
I mean, the order block concept is the same thing. Order block, get wicked in. In this case, I wouldn't have got wicked in. Order block, get wicked in. In this case, I still wouldn't have got wicked in. I mean, there are other ways to enter if you don't get wicked in, but the concept that I share with you guys, yeah, you miss these trades, but you don't have to worry about losing. The concept that I share with you guys, you'd have got in, maybe not. You wouldn't have got wicked in on this one, but
maybe on a different time frame, you see other order.
yeah,
blocks?
maybe. But I don't think that when most people trade indices, I don't think they get in on the 4-hour time. I think they're going to trade a very low time frame. So you would have got wicked in right here with this order block. You get wicked in and you got taken up here. So I think that the concept is going to be the same. I just think that maybe you have to adapt your exit strategy or something. I would still trade it to the next high. Whenever I traded the US 30 last week, I saw the setup on the 1 hour, right? And I didn't drop down to enter. I entered based off of the concept, right? So this is what I mean. If you mark out your order block, it doesn't matter what time frame you're on, right? Your entry is going to be at the top of this order block. So all I did with the indices, once the price went into the order block, I put, in this case, it would have been a buy stop. I would have put a buy stop right here. And as it went up, it would have taken you out of here. In this situation, it only taps in a little bit. So maybe you wouldn't have caught this trade unless you would have put a buy limit and a sales or a buy limit and a stop loss down here. The problem with doing this on indices, there's too much, like the pip count is heavy, right? So maybe your account can't hold the drawdown in case the price actually comes way in here. That's why when I do the indices, I wouldn't use a buy limit here. I would wait till price passes and I would use a buy stop because I would only be interested in it once it comes back up, if that makes sense.
What do you mean price passing?
Okay.
When the candle is finished?
Hold on. No, it's not when it finished. Let me show you. We have our area that we're interested in. Okay. Everybody tracking that?
Tracking.
Okay, this is the area that we're interested in watching. So price is right here. Once this candle opens, we expect price to push down. Once price passes my area of interest, then I come in my MT4 and I say buy stop, and I put this price in right here. So once price finishes bull crapping down here and it heads back up, it'll pick up my buy stop. Does that make sense?
Yes.
Now, that's a little bit more difficult to do on an indice that moves fast, right? So sometimes I miss my trade opportunity because when I'm trying to enter, this wick hits and it heads up, right? I don't trade SPX. Whenever I do this, I'm on either NAS or US 30. So my entry is based on the concept of trading at this order block, right? Now, what somebody else might do is drop down to the 3-minute and do this on the 3-minute, right? And maybe they'll say, well, Ty, you don't have to worry about that drawdown if you use a smaller time frame, which is probably right? But I don't trade this every day. The people who trade these indices tend to trade them on a lower time frame. So whenever I say I'm getting wicked into the trade, this is what I mean. I have my area of interest, and I'm waiting for the wick of this candle to tap me in and take me up. And in real life, this is what it looked like. See, bang, and it kept going.
Mhm. I guess my question was just basically trying to see the top-down analysis, like don't even start at the, I don't know, daily. So
Okay.
you went straight to
So-
the 15-minute?
How do you guys? So I would definitely do a top-down analysis. Maybe the most people don't start at the daily, but I just like to do that because I want to see where we are as far as price is concerned. Maybe this is going back up, but what I want to do from this daily is put a fib on this move. So we're past the golden zone. This area would kind of concern me because this is ICT's optimal trade entry to take it down to the other side. So I would personally want price to get above that area. I don't know how most of you guys who actually trade the indices every day feel about that. Des, if you were trading the SPX, would you use your strategy? Your
I was helping someone who does the SPX 500, and it just wasn't, it was reacting the same way, but it just wasn't giving the amount of pips. So, I was like, I don't know if you want to do this with that and just go back to your way and just basically use order blocks on the 1 hour, because I do the 6 hour on indices.
right, but as far as picking the direction, do you use that 1400 candle?
Yeah, I still use the 1400 candle for direction. And it still works. That part still works.
Okay, so let me basically explain this, or you can explain it if you want to, Des.
Okay.
Are you at a computer?
Yeah, I'm on my laptop.
Do you want to share your screen?
Sure. And I get all confused with this thing. That's okay. Okay, let me take this. Hush up, Pat. Shh.
Look at them long flowing locks.
So stop.
Oh my God.
I got the cat. Yo.
No, I'm looking at your ugly candle assortment.
Oh. Let me do NAS. I was just going over this with TT yesterday because I miss NAS. And that's always my hang up. If I don't get my area, I just don't get in because it just messes with my head. But anyway.
We talked about it yesterday, Dave.
Yeah. Okay, so what I do is this, and it gives you direction for the next day. Now, I still do, I go by what market structure first, and then the candle. Okay, so let's go here. So this was the 14th hour. It's already marked it up. Okay. And that was from the 24th. So I blocked this off at 2 o'clock, and it's the 1400 hour candle. I go to the 90-minute, and it tells me what tomorrow, how the market's going to unfold. It tells me that it's going to go up, and it's going to go up again, and then it's going to start heading down. So, and it did exactly that the next day. So let's see, 9 o'clock, the open went down a little bit, but then it started heading up. It went up, then it started kind of going down. And that's how I read the market. as far as what's going to happen for the next day. Now, what I do is after I know that, I go what I'm supposed to do. Sometimes I overthink it. Because I was expecting price, let me take this one off. I was expecting price to come down a little bit lower because I'm also kind of working, as you see, I have my dailies, golden zones in there. So I'm kind of working that in there as well. So what I do is do the 6 hour and I'll take my fib. And again, my fib is not like anybody else's fib because I've tailored it to me and what I do. So it's going to have a lot of numbers and it may freak you out, but it works for me.
It always freaks me out, Des.
Yeah, I know. That's my golden zone one. That's that's the one I use for the golden zone. But I use this one. We'll do blue today. I'd use this one for when I do my 6 hour. So I'll start from there and it says, okay, well, price had already passed that. When I get up and start charting at 5 o'clock, or sometimes I'll chart in the evening after the market reopens at 6 o'clock, then I'll start charting it there too. But it already passed that. So it's like, okay, I was expecting price to kind of come back in here to this area yesterday. It didn't. So because I was,
Des?
huh?
I have a question.
Yeah.
So on this 6 hour, using 6 hour candles,
Mm-hmm.
but you still charted the entire move up,
Yes.
right?
Yeah, because I was expecting it. Okay, even though okay, I'm sorry, the candle, the 14 hour told me that the market was going to be up.
Right.
And I'm still using from the bottom up because it's actually a continuation from the entire movement.
Okay, I guess so. I just wanted everybody to understand where you placed your fib was that
Mhm.
entire put the impulse move up, even though you're using 6 hour candles, you're fibbing the impulse move up and you're seeing the pullback. So that pullback was a weak pullback. It pulled back 25%, about 25%, right?
Yeah.
And it kept going.
Yeah.
Okay.
So I already knew from that it was just going to be a continuation and everything. So, but my mind, my mind told me that, well, it should kind of pull back into this area down here because this is a lot of imbalance in that candle. So that's what I was kind of expecting. So when I went to yesterday, when I went to look for an entry, I went to this 6 hour, these two 6 hour candles, because again, this is just a little short pullback to continue up. So, and that's where it kind of got me. So I fid this area up, change my color, and for this purpose, I'll just use orange. So I was expecting price to come to the 50% area because again, it was only going to be a small pullback, then start heading up again. And it didn't do that.
So I think this is where you're going to lose people.
Okay, go ahead.
You fibbed the first one from the bottom up.
Right.
And the second, you got to explain what you're doing with the second.
Okay, the second one, I went to these two 6 hour candles because I knew it was only going to be, because of these two down movements, it was only going to be a small retrace to continue to the upside. So instead of, so what I do is this. I look for where price is at that moment when I get up, and I'll go on the 6 hour. When I get up, I already know that I expect price to go up. So I want to try to get a tight as entry as humanly possible that I can do. So where price was around this area yesterday, my expectations, because of this huge imbalance in this candle, was for price to come down more than it did. I was expecting price to come down to around this area yesterday, and it didn't do that for me. It had already actually kind of surpassed that, but you'd have to go in the lower time frames to see that. But I was still expecting, because we had news on Friday as well. So I was expecting news to kind of pull it down a little bit as well, but it did not happen. So I'm still on the 6 hour. Price was around this area. So I said, okay, let me grab this 6 hour block and go up. And price didn't come there. Where price came was this the closest one? And I always tell myself to use the closest one, but I'm human, I forget. So this is where price came to. And where am I? There we go. And I know you're saying, I can't see that. It's tiny. Yeah, it is, because I got a lot going on. Okay, so price came to here when we go on the lower time frame. We go to the
So
5 minute.
Hold on, I'm so sorry, but
Go ahead.
can you go back to where you just were? I think it was a 6 hour.
Your 6 hour. Uh-huh.
So just for me to understand, you went back to I guess, not the purple diagonal circle thingy.
Okay, yeah, that's because I was explaining that yesterday. So I was just using that as a place mark. So these
The
two
one
up
for the
candles.
where you say you used that one, why did you use those two? Is
These
that
two,
those for-
these were the closest actually where price was at that time when I woke up in the morning, where price was moving to. And technically, part of my method, I'm supposed to use the closest candles when I wake up where price is at. And I did not do that. I used these two because of my expectations. And that can get in your way when you expect something to happen. Price to come down into this candle, more into this candle, because as you see, that's a huge imbalance in that candle. I mean, it's a lot. There's a lot of
Okay, but
imbalance in that candle. So
if
my
you-
expectation, ooh, I'm sorry, go ahead.
I see the imbalance, but if you say that this, okay, I can't see, I was trying to use my cursor. If you say you use the order, I don't know, the two candles where price was at the time, no, the ones
Yeah.
before, I mean, after, no.
These
not-
two right here, yeah,
No, the other two white
these
ones.
two. Price was more up here yesterday when I woke up. Price was more into these two candles.
Okay, so now I get it, because I was like, if you were looking at this, how can you see the imbalance? Okay, I get it.
Yeah, yeah. And because of the imbalance, and because we had news, my expectations, and that's why I use these two, was for price to kind of pull down into here more and kind of get some more of the equity in that candle. It did not. So if I only follow my own rules or be able to, switch up and change, but I can't, I'm a human being, I get stubborn. As we see, price came into, tapped you into 127, which I can use as well as an entry. And since I knew it was going up, I'd have been comfortable using that, or 194. Well, 94 I just put on for something else because I get tired of using the GAN box all the time and pulling it out, or 88 or whatever, and take it on up. But when I put the other one on, price, my entry was the 50% way down here, and price never came. It was like, about 26, 32 pips away, and price never came to that area. And there's a that whole, if I go to the hour, you'll see it a little bit better. But this whole thing right here is also an order block. And had I also rechecked at 9 o'clock, that's part of my little rules, is to recheck 9 o'clock. I could have just used this candle right here, or this order block right in here, and gotten in, but I didn't do that because I felt comfortable with what I thought versus following what I'm supposed to do. And that happens, and it's okay. I just have to live with losing a whole bunch of pips. And that was because, I had an alert down here in case price came to this area as well, and it didn't come, so I can take that off. Yeah. But it happens, and I just have to live with those consequences of being stubborn and not following my own little rules. And that's it. But it's, to me, it's simple, because like I said, the 2 o'clock candle right here will tell you the direction of the market, and also how the market will unfold the next day on the 90-minute. You have to read it at 3:30, and it will tell you exactly what's going to happen. Sometimes I'll get two wicks. So to me, that's like a double tap. It'll tap into my 80%, 70% area twice, and then start selling off again or buying up again or whatever. It'll tell me if it's only going to be a liquidity grab and then start selling off or buying up. So I rely on it a lot because it really tells you how the market's going to unfold, and it works on US 30 and NAS. And yes, the S&P, I just don't particularly like the S&P because for all the work that I go through and getting up at 5 o'clock in the morning, I'm like, man, I need some more pips. And
Just
that's it.
question. So why
Yeah.
is that 2 o'clock candle so significant? And I don't understand how you dissect the 2 o'clock candle with the 90
Okay.
minute.
What the 2 o'clock candle between 2 and 3:30.
Mhm.
And this is my theory. Until someone proves me otherwise, I'm going to go with it because it works. And I've back tested it for like 2 years back in time. The hedge funds and banks, they do trade every day, okay? And they're putting orders in at the close because they're getting ready to close up for the next day. The market technically closes at what, 5 o'clock, but they have to, I think at 4:30, they settle all business and everything, all accounts have to be paid, money has to be paid out to people. So they stop us from trading like at 4:15, 4:30, they open back up and, things will still run, but they have to settle all business. 2 o'clock to 3:30, they're putting in orders for the next day. So it lets you know how the market is going to unfold because that's what they're doing for the next day. And it works.
If
Are you-
the 2 o'clock candle is a bearish candle, that means the
No, it's not about what the candle is going to be bearish or a selling candle or a buying candle. The candle has nothing to do with it. It's how it comes out of that 90-minute box. So if it's coming up, as you see, this was a strong up move, that says it's going to be a strong up move. Now this on, what was that? The war day, it was a strong down move, but we was sleeping, and on overnight, Australia and Asia was like, okay, we started the war, it's sold. It was like, okay, nothing I can do about that. So market structure is primary always. Market structure said, okay, yeah, we sold all of that. And I even put in the chat that day, I said, well, I guess Nas is going to be buying up tomorrow because we had all this to cover, all imbalances and everything else. So New York came in and started buying everything up, back up. Over here is another 90-minute candle. And it said, we're going to have a liquidity grab, and then we're just going to meander around, but eventually we're going to go down. So
what?
around here, when, let me go to the hour.
Hold on. Okay, so I see that your green boxes are the ones that show you this is the 1400 candle, right?
Right.
So how does the candle tell you it's a liquidity grab?
Okay,
Where?
I'll show you. Okay, so this, if it just pokes out a little bit, the candle, if it comes out a little bit and then starts going down, let me see if I can find a better example. This one's a little bit better. Okay, so you see how it just comes out a little bit, but the rest of all the other candles kind of come down. That tells me it's going to be a small liquidity grab to the top, but the market itself will be a down market the next day. And let's see how
Where do you see the liquidity grab though?
Okay, let me see if I can blow it up. Do you see this part of the candle sticking out, that wick sticking out?
Of
Do you
the
see
white candle?
Yeah, the white candle. You see this wick sticking out?
Yes.
Okay, that tells me it's just going to be a small liquidity grab to the top and then start selling off.
Okay.
Okay, so when I come to the market and start charting the next day, what I'm looking for is something where it's going to be, I'm going to look for a down move, but I'm also going to not necessarily look for a how would I say that? I just know it's going to go up first and then come down. So let's see if I can. What was this candle? So, and again, if market structure is up, I'm going with market structure first. So 7, 9 o'clock. So the 9 o'clock candle, which is around the open time. Let's see if I can find it on it was right here. So the market came up a little bit around 9:30 was still up, and then it started selling off. And that's all. And sometimes it'll tell me it's going to be like, if it's like 2 liquidity grabs up top, it'll tell me the way I read it. And that comes for me, with practice, and I've been doing it now for about 4 or 5 months.
Hey, Deb,
Yes.
I think that I think they would benefit more. Like, this is not my first time seeing this.
Yes.
But I think they would benefit more, like if you hit the replay.
Oh, okay.
And actually do the fib work so they can see it. Like right now, you're drawing the fib over candles that are already there. But
Okay.
if you replayed it, I think they would benefit by seeing what you mean by those candles.
Okay. Hold on real quick. Let's see if we can get. I like to take it from when I wake up. That makes more sense to me. And I'll take this one off. Okay, so we're just going to ignore all that stuff over there. And we're going to go back to the 90-minute. Okay, so
Can you also go over the times too while you're doing that? The
Yeah.
times that you're looking at it?
yes, okay. 1300 is 1 o'clock. 1400 is 2 o'clock. So my little alert goes off 2 o'clock. I say, okay, it's time to, wait for 3 o'clock it goes off. It's time to mark this up. So I take my box.
These are all New York times, right, Des?
Yeah, New York, I'm sorry, Eastern Standard Time, 2 o'clock Eastern Standard Time, New York. So 1400 hour, I box it up just like that. Sometimes I get crazy and go, precise, and I'll get the exact coordinates from up top here for that candle, and I'll put that on. So then at 3:30, I switch over to 3:30. I switch over to the 90-minute. Switch over to the 90-minute, and I look at it. It says, okay, we're going to have a little liquidity grab up, and then the market's going to go down. Okay, so when I wake up, I think this is the time I wake up. 1700 hours. I don't know. Oh, still some more time. Hold on. Let me forward it a little bit. Okay, so that's what I get when I wake up in the morning at 5 o'clock for some ungodly reason. I say, okay, so the 90-minute said it was going to be up, liquidity grab, and then down. So what I'll do is look for a down movement. I'll use this block for my fib and put it here. Okay, and then start watching it on the hour.
Which part are you fibbing exactly?
Yes, I'll go back to that. I fib the closest, even though this just happened, I'll fib this up because it's the closest. So from here down to here, from this candle down to the rejection candle, the white candle, the up move. So all of the down movement and then the up movement is the rejection part. So that's where this fib goes. And that's why sometimes I use this so it can be seen a little bit better as to what I'm using, because sometimes I'll have 3 fibs on. I have the up movement and the down movement on. So I'll have this like this so people can see that, or I can see, or I know which one I was working with. So that's the area that I used.
Okay.
Now, price has already come up there at 5 o'clock. So it's like, oh, well, that's on the 6 hour. So I'm like, oh, okay. knowing that we're supposed to have a down movement and price is supposed to come back in there, it's like, okay, let me wait and see. Sometimes I'll go back to the 6 hour and maybe look at a higher, if it's still, you know, really high, look at a higher one, and I'll put that on as well. And I start confusing the heck out of myself. And I'll just color it a different color just for my visual, and I won't get, you know, so confused. But yeah, I do watch where price is coming. So as it unfolds, now I like my entries again. My favorite entry is 88, 83. That's the one I love the most. 83, 81. 78 I'll use, and 76 I'll use sometimes as well. I like those. That right in here is the area I really like to get in. However, I know a lot of times if I don't get 83 or 81, price does like to come back in here. So I have to make sure I have at least a 30 pip stop loss, because, you know, sometimes this is a lot further than what it looks. And that's only 13 pips. So that's not bad. But I like to use a 30 pip stop loss, just in case. So then where's the replay button on this thing again? Shoot, 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 shoot. Okay. Price comes down, price goes up. So it's 11 o'clock. So 6, 8, 9. So price did come up there. Price did, it didn't come as high as I thought, which is fine.
So real quick, Des, that will technically be your liquidity graph that you've been expecting.
Okay, at the open, the liquidity grab came up here, down here. Now, if I'm waiting, which I'm should be able to do, waiting for price to come, it came to this order block on the 1 hour. So if on the 6 o'clock, that's all this is based on order blocks anyway. So, you know, it's not a new concept or new thing. So on the hour, it came to this order block, even though like I said, I'll prefer to get into like 83 or 81. If I set my what buy limit, sell limit here, I'm good. It'll get me in, it'll stop me out, not stop me out. If I set 30 pips, I'll still be in it, and it'll start heading down. This works on the open a lot of times, and it also works anytime. So what do I mean by that? It doesn't necessarily, if you use this, it doesn't necessarily price will come at the open. It does a lot of times. I'd say probably 85, 90% of the time, it'll be for the open. Sometimes it won't, and that's okay. You don't have to, you just have to wait for price to come to you and get you in the market, and then take it where you want to go. So a lot of times I have, you know, sometimes I've waited and sometimes I haven't. Sometimes I've been like, okay, well, it didn't happen at the open. So it's like, okay, I'll just wait and see what's going to happen. I do expect it to come because I hadn't had any kind of breaker structure or any indication from the 90 minutes that it was going to be, or even at the, even when I woke up, market structure was still not really down. So I said, okay, fine. You know, we'll just wait, see where price is going to happen. As long as I have my order in, price should come to me. I'll get in the market, things will be fine, and keep on going. Because also during this time, we were primarily in a down market. So I didn't have any kind of qualms about, oh, just waiting for the market to come to me. So as long as I get my area for me, I'm happy, I'm satisfied, and I'm good. If I don't, that's when I start freaking out and won't get in. So
now that you explained your extra fibs, now it makes more sense. Because
yeah, I know they look crazy, and sometimes it's like, why does she have all these fibs on? Why are they different colors? They're different colors. They represent different areas, and I need to see what, you know, like I said, when I woke up, if price is already up here, it's like, oh, okay. You know, I may want to get in early, but I did, you know, I don't or whatever. I'd like my areas. So when I actually take my trade and it's at my area and it comes and gets me in, I'm happy as a camper.
Okay.
And when it doesn't, it's like, I missed it and I won't do it. But it does work a lot of times for the open. Like I said, about 85 to 90%, you can do this for the open. And sometimes, you just have to wait for price to come to you. And it'll get you in and then take you on your merry way. And what I find when I started using the 6 hour over the hour or the 4 hour, a lot of times you're looking at probably a 200 pip move from the 6 hour time frame. And I do use my fibs levels for take profits over the even candles.
Yeah, the equal highs or equal
Yeah.
lows. Okay, well, now it makes a little bit more sense.
Yeah.
Thank you.
You're welcome. Oh, I did better this time around. Okay, Todd, you can have the screen back.
You
Thank
have
you
to,
so
you have to
much,
stop
Chris. That
sharing.
was
Beth.
Okay. Stop sharing. Do I have to make you the person again?
No, I'm
Okay.
still the host. I just,
Good. Whew.
all right. Does anybody have any other questions? Hey, AT.
Aaron.
AT.
Yeah.
What are you trading next week?
You know what I'm trading at.
I'm asking you, sir.
Let me pull it up. I'm trading. The ones my mama was talking about.
I don't know what your mom was talking about.
Not that me and my mom was talking about. GN and GC for sure. GN and G. I'm definitely gonna be in those two, and then the one that had the sell side, the sell.
Okay, I think
When it ran the low.
How many trades are you going to be in, son?
3.
I don't like 3.
Well, two is fine. You know me. Hey, 2 is fine.
2 trades. 2 trades.
2 trades. Let's do it.
And once the trade is risk-free, then you can get in another one. I think that's important. Don't overextend your trading. Get in 2 trades. Once the trade is risk-free, that means you move your stop loss to break entry, then you can enter another trade.
Yep. All right. That's how I'm gonna do it. Yeah.
So even if you wanted to do the easy money strategy with 2 trades,
Yeah.
and maybe you looking to enter that other one the next day or later on that night, once you're risk-free, then that's cool. Just 2 trades. I don't want you to blow your account.
Right.
All right, anybody got anything else?
Good here. Thank you.
Hey, I appreciate you guys, and let's make this money.
Yes, thank you, everybody. Bye.
Yes.
Great call per the usual.